In the meantime, though, we're talking more about that recent Wall Street rally. It's hit a little bit of a speed bump over the last few sessions, and joining us right now on the Squawk Newsline is Marc Faber. He is managing director, editor, and publisher of the Gloom, Doom, and Boom report. Marc, reading through your latest notes, and one of the key takeaways is that you don't think that the Asian stock markets are going to necessarily do very well in 2013, and as a result, you're trimming back your exposure to some of them. What do you think is going on, and which markets in particular do you think will not perform as well?
Well, what I basically said is that the markets that have performed extremely well since the lows in March 2009, in other words, Malaysia, Indonesia, the Philippines, Thailand, they are not going to do particularly well in 2013. On the other hand, if I look at the kind of money that is sloshing around the world, I think investors will look at markets that have performed very badly, such as Vietnam, China, and also Japan until recently, and that money will shift from some of the relatively high-valued markets into these markets that had a horrible performance. So as an investor, if you need to own stocks, then I'd be in Vietnam, in China, in Japan, and in particular in Japan, and maybe also in Ukraine, and would avoid the markets that have performed spectacularly well.
Is that just a function of what goes up must come down, or what goes up won't continue to go up?
Well, I'm negative about 2013. I think we had a huge run-up in stock prices from the lows in March 2009. The valuations in Asia are not particularly stretched, particularly compared to, say, zero interest rates on deposits with the banks and less than 2% yields on 10 years treasuries. But at the same time, I think there has been a deterioration in the technicals of the market, and so I'm relatively cautious about 2013. But having said that, I also pointed out in my recent report, we have so much government intervention into the free markets, it's very difficult, and that has always been the case, it's very difficult to make any predictions about the future. And some research papers show that forecasters are as often wrong as they are right. So in other words, you can't predict the future. But when there is government intervention, you can predict it even less.
And, you know, it sounded like there was a little bit of a caveat. You said that you would be buying in markets like a Vietnam, a China, and Japan if you had to own stocks. Are there other assets that you like more?
Well, actually, I'm distressed to say that I don't particularly like any assets at this stage. I mean, I have a diversified portfolio. I'm not liquidating everything, but I have a lot of cash. I just feel deeply uncomfortable, A, about the future economic position of the world, B, about the geopolitical situation in the world, and C, about social unrest in different countries.
So if you keep it in cash, though, that's making a bet on the currency itself. Are there particular currencies that you're putting it into?
Well, I am reasonably confident that the U.S. dollar will not collapse right away, that it can actually rally somewhat. I have some reservations about the Super Bowls that say that the U.S. will become energy self-sufficient and that the U.S. dollar will rally strongly and this and that. But I don't think that the U.S. dollar is a worse currency than, say, the euro. I happen to also own gold because actually I don't think that it will go up right away, and maybe we still have a correction of another 10% or so on the downside. But I just see that governments will print money and that there will be competitive devaluations, and so I want to have gold as an insurance policy.
Wow. But am I right to read on that you see the U.S. dollar as the, the best place to be in terms of currencies? You don't think it's worth less than the euro?
I suppose. I mean, I also own Singapore dollars. I think the Singapore dollar is probably a very good currency to own, and I own some through my exposure, some Asian currencies. But I don't think that the euro is now a very desirable currency to own. And we have a lot of problems, as Senator Ron Johnson explained just now, in the U.S., but we have the same problems, or even more, in Europe. So in the beauty contest of the ugliest currencies, the U.S. dollar is not winning. It's okay, and I think I'd rather be in dollars at the present time than, say, euros.
Okay. Marc, that's fascinating stuff. We really appreciate your time this morning, and we will see you on camera again very soon.